It's 3:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, and NASDAQ holding on to gains. 39 minutes to go ahead of the closing bell. And right now, the S&P is up 94. That is an advance of 1.7%. Stocks are rallying as traders snap up battered tech shares. The Dow up 577, up now by 1.4%. NASDAQ up 389 points, up now by 2.2%. 10-year, 4.32% with a 2-year that's currently yielding 4.03%. Gold down $14 the ounce at $3,007, down 0.5%. And West Texas Intermediate crude up 1.4%, $69.20 for a barrel of WTI. Bitcoin now up 4%, 88,472 on Bitcoin. In recent weeks, increased talk of a potential recession because of the threat of tariffs. Liz Ann Saunders is chief investment strategist at Charles Schwab, and this morning she was a guest on Bloomberg Surveillance.
I think if we go to the extreme on the tariff front, it raises recession risk, not just in the United States, everywhere. And even if we were to have more resilience from a trade perspective, because as a country we're less trade dependent, if you started to see more weakness show up globally, that obviously filters through to the United States.
Liz Ann Saunders of Charles Schwab. There's a new owner for Dun & Bradstreet. Clear Lake Capital Group has agreed to acquire Dun & Bradstreet in a deal that values one of Wall Street's oldest data and analytics providers at $4.1 billion. Bloomberg LP, the parent of Bloomberg Radio, competes with Dun & Bradstreet in providing financial information. Dun & Bradstreet shares, they're up now by 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Some news in the world of weight loss today, Carol Masser. Novo Nordisk has agreed to pay United Laboratories International Holdings as much as $2 billion for next-gen obesity drug. It's the Danish Ozempic maker's latest move to refill its pipeline of experimental treatments. Also, last week, Eli Lilly began selling its blockbuster weight loss and diabetes drug, Mounjaro, in India. It's a country that has the world's third largest number of obese people.
We continue to see this marketplace grow, expand, and we continue to see each of these major drug players look for their next offering when it comes to GLP-1. We do talk about these weight loss drugs an awful lot, especially from a business perspective. Investors have really sent shares of these companies higher than lower. There's been some volatility, certainly over the past couple of years. Dr. Sue Dakotas is a New York-based physician, a board-certified medical internist, and a weight loss specialist. She is an attending physician at NYU Medical Center, joining us right here in New York City. Dr. Dakotas, good to have you here on Business Week. This is something we've been covering nonstop, to be quite honest, over the last 2 years. We have a reporter that's devoted to it, to really understand the offerings, the nuances between the different drugs, and the expansion as we continue to see new offerings come out. Tell us about, from your perspective, what you've seen over the last couple of years in terms of the uptick in the usage and whether or not it really is a significant change when it comes to treating weight loss and actually making people healthier in the longer term.
Well, in my practice in New York City, I have had tremendous results in my patient population with using these new GLP-1 drugs. And I've used just about all the ones that are available. And I'm really excited about the new drugs that are coming out. So as you know, there's something called CagriSema that Novo Nordisk is going to come out with, which is a new drug called cagrilintide that they are combining with the Ozempic, the semaglutide. And retatrutide is coming out from Lilly, and that actually is a 3-receptor drug. So what we see is that these drugs get more sophisticated and affect more receptors, and I think more patients are going to have good results. The problems that we have with semaglutide in the beginning, before we had access to Mounjaro, tirzepatide, is that many very overweight patients hit the wall, meaning they couldn't lose weight after a certain period of time, and that was very frustrating. And we found that with tirzepatide, being they were hitting a second receptor, patients actually lost more fat and weight loss continued. And I look forward to that with some of the new drugs that we have. So I think we're going to be able to reach larger numbers of patients. But what I always hear is so many people are saying these are lifetime drugs, meaning you have to be on this for a lifetime. I really disagree. In my practice in New York City, I've been able to get most of my patients off these drugs if they're not diabetics. And I think a lot of times we're missing the point with these drugs. People know that they're appetite suppressants. They also know that they're great to stabilize insulin and that they're great to reverse insulin resistance. And that's all they're thinking about. And then the person loses weight and then they go off the drug, sometimes abruptly, or they stay on it forever. What I do in my practice is I use a body composition scale.
Okay.
So I'm closely monitoring people's body fat. And that's really the key. I think if we can get that body fat down into the sweet spot, I think that's where we get the long-term health effects that everyone is talking about. So that's where we're getting the huge anti-inflammatory effect. That's where we're having the appetite regulatory system really being rebooted on a permanent basis. So that person doesn't crave the foods they used to crave. And they have a much, they have a lesser appetite long-term, which is really, really important.
Are you seeing this, doctor, in your office combined with other methods of losing weight? Is it important that your patients also remain active or get active?
Oh, of course.
Or is the shot enough?
Well, we always start out with, we know our patients well, taking a really good history. What have your eating habits been? What is your lifestyle like? And practicing in New York City, many patients are pretty sophisticated. You know, they already have a pretty good lifestyle. They may not come into the office very, very obese. They may be barely overweight, or their BMI, which, you know, is a height and weight parameter, may be normal, but their body fat is higher than they'd like it to be. And as they get older, you know, maybe they're menopausal, they're getting into middle age, they find that their body has changed. They don't feel as good. Their clothes fit differently. They don't get as much out of exercise that they used to. So then we really help those people reach an optimal state of health by getting body fat down. But yes, of course, diet and exercise is important. But when you're insulin resistant, when you have hormonal problems, there are other genetic and environmental issues that we're hearing about so much now, aren't we? All these environmental things that are affecting our metabolism. So many people are already adhering to a good lifestyle, and they just need that extra help.
I'm getting hungry. That's what I'm going to say. Like, I'm ready.
I don't think that's the point of the
I thought I heard a stomach, and I'm gurgling over here, and I'm kind of hungry. No, what I want to ask you, though, is I've seen people who get on it lose a lot of weight, but they also lose a lot of muscle mass, and I'm kind of amazed by that. I've seen them where their legs are very thin, like all their muscle is gone, which can't be a good thing.
Well, it gets back to that question that the issue here is, what is their body fat? Is anybody monitoring that? So if the patient is not monitored carefully, so they're not really given dietetic nutritional support, because as you know, these medications can really turn your appetite off. So sometimes you don't feel like eating anything. So we have to watch that carefully. Also, hydration is key. If people are not really well hydrated, they wind up burning muscle. You know, because the body kind of protects you. When you're burning fat, you're losing a lot of water. So the body protects you from this. So it assumes that you're getting dehydrated. This could be very dangerous. And then it can switch to burning muscle as a last resort, which is not a good thing. None of my patients have lost muscle because I'm watching it very carefully by weighing them, and they're drinking a lot of water.
As someone who's been practicing for a while, how do you think about this medicine? I think there's some that think, wow, is it just too good to be true? We kind of joke with our reporter who covers it, like, is this the drug that's going to, you know, kind of cover everything that ails us or fix everything that ails us? Or is it too early to know if there are going to be some kind of complications down the road from taking it?
No, that's a very good question. I mean, I've been using these drugs for about 12 years now because, you know, before Ozempic, you know, made its big splash, there were other drugs that we used in the same family that weren't as effective. These drugs are peptides, and what peptides are basically simple chains of amino acids. So I think that as far as the pharmacologic structure of the drug, it's simpler than aspirin. So I think that the body knows, these are not complicated drugs in their structure. So therefore, it's easy for the body to break them down. And we use peptides for a lot of things in anti-aging medicine. I think they have a very high safety profile. But what concerns me is that so many people are accessing the wrong kind of care. You know, they're going on these online platforms, you know, and really just like having a meeting like we're having right now. They're not getting seen by the physician. They may not be in contact with the physician at all. And if they are, it's probably not a weight loss physician. They're not getting weighed by any matter, or certainly not a body composition scale. So those, I think, are the patients that are not having great results. And so many people are resorting to these online platforms. And even Lilly now, and Novo Nordisk, I understand, they're going to have a place where somebody can get the drug directly from them. So they'll probably have a consult with a PA or a doctor via Zoom, maybe once every couple of months, and that's what they call getting medical care.
Right.
So that's where I think we're going to have problems.
It doesn't sound like you're a fan of that. Hey, we only have a couple minutes left, so I want to make sure to get in some last questions here.
Oh, sure,
Back
please.
in October, RFK Jr., who is leading the Department of Health and Human Services, he says that delivering healthy food, he said this in October, to the American public could, quote, solve the obesity and diabetes crisis for a fraction of the cost of obesity drugs. My understanding is he's since said different things about the GLP-1s, but in general, he's not a huge fan and thinks this stuff could be solved through diet and exercise. How do you view that?
I think that's incorrect. I mean, I think if you look at people that are markedly obese across the country, certainly food and lack of exercise has something to do with it. And especially for future generations, if the young children today and children who will be born, if they're exposed to a really healthy food supply, I think that's going to be great. But for the young adults and above who are obese, I don't think that just eating healthy is going to be the answer. Now, these drugs are expensive. So most patients that I see have tried diet and exercise. They've tried every keto and paleo and a vegan diet. And I think sometimes insulin resistance is more than just the food you eat. There are other chemicals in the environment, genetics, epigenetics, hormones. All of these things can affect the way your body metabolizes nutrients. So I don't think it's that simple. Like, I don't think that he would be able to reverse obesity by just giving somebody a healthy diet.
Just got about 45 seconds left here. Dr. Dakotas, I'm just curious, what percentage of your patients who look to lose weight use the GLP-1 drugs? And are GLP-1 drugs for everyone who are looking to lose weight? And again, just got about 30, 40 seconds.
No, it's not for everyone. I mean, if somebody has a history of an eating disorder, or they have a lot of thyroid issues, pancreatic issues in the family, very sensitive GI tract, if they're not that overweight or their body fat is not that high, they really should try a clean diet first. And it has to be assessed, is this person really eating cleanly? Do they know what they're doing? What kind of exercise are they doing? Sometimes if they're doing too much cardio and they're insulin resistant, that can cause them to actually gain weight. Wow. What they might need to do is do more resistance training. So every patient is an individual, but I think for the most part, if someone cannot lose it with diet and exercise, and I've documented that their body fat is high relative to their weight, then I think they would probably benefit from a GLP-1.
All right, going to leave it there. Thanks so much for joining us. Dr. Sue Dakotas, New York-based physician, a board-certified medical internist, a weight loss specialist, attending physician at NYU Medical Center, joining us right here in New York City. Interesting stuff.
Yeah, really interesting stuff.
Yeah.
Hey, coming up next, we're going to drive to the close. Sarah Ponsick is joining us from UBS. That's next on Business Week.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, and NASDAQ all pushing higher. 20 minutes to go ahead of the closing bell. Right now, stocks are very close to session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks with an aggressive bid today on reports Trump may take a more targeted approach to the tariffs. The Dow is currently up 589 points. S&Ps are higher by 96, while the NASDAQ gains 2.2%. The U.S. 10-year yield is at 4.32%. Gold is in the red, oil is in the green, and Bitcoin, that's higher by 3.9%. Among the main 11 S&P sectors, leaders were consumer discretionary and telecom. Only utilities were fractionally in the red. And leaders to the upside in the Dow, NVIDIA and Amazon, while Merck fell 1.4% and led to the downside. Among the banks, HSBC weighs outsourcing some trading operations to lift returns. And wrapping things up, Besson says he expects interest rates to go down. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just got about 18 minutes to go until we wrap up the Monday trade. You know, just talking with Bill Maloney kind of off air, just fundamentally, technically, an interesting day where futures were up a lot. We came up out of the gate with some gains, and then we just continued to move higher.
That's what you talked about when I went to get a snack?
Among other things.
Okay.
But I was like, what do you think? You know, like where we're going. And that, from a technical basis, that's a pretty strong sign. We'll see what Sarah Ponczak has to say, though. What'd you think of?
I brought you a banana.
He did. I was hungry. Like, she's talking about GLP-1 drugs, and all I could think about was like, I want to eat food.
Yeah, well, I don't think that's the whole idea
So
of the
wrong.
GLP-1s.
I know.
All right, let's get into it with Sarah Ponczak. She's financial advisor at UBS Private Wealth Management. She joins us from Florida. Sarah, how are you?
I'm great. Good to see, or I guess hear from you guys. Tim, you're so considerate bringing Carol a banana.
When are you coming up to New York?
3 bananas.
We're actually hoping to come up in the next month or so.
Okay.
So I will let you guys know when I will be up there, and hopefully I can make a trip to the office.
Let us know if you need help finding the place. I know it's your old stomping ground, so you don't need any directions.
I could still find it with my eyes closed.
Okay, good. Well, in the meantime,
there enough time.
In the meantime, maybe we'll get some clarity on tariffs before then, because April 2nd, it's supposed to be Liberation Day. You are thinking a lot about tariffs when it comes to the uncertainty that is out there, though today's trade seems like it has a lot of certainty in it, Sarah.
It does. Today's trade has been very forceful and strong to the upside. So it's nice to be on with the two of you on a day that's actually green and happy for stocks. But at the end of the day, tariff talk has been all over the place. The conversation has been very fluid. And although we have gotten multiple calls and emails from clients over the past few weeks just asking what is going on, we've been stressing just this, that the story or the narrative and the policy at the end of the day can really change on a dime. And that's what we're seeing today, and we're seeing the reaction in markets. And what I think is so interesting and I think important is to just put this all in perspective, because if you look at the correction that we saw in the stock market, at the end of the day, it was very normal. And frankly, we were overdue for one. We had 2 straight years in which the market was up more than 20%. And even in the last 2 years, a lot of people forget we saw corrections in each of the last 2 years. Last year, the market was down 8% at its intra-year low, and yet ended the year 25% higher. In 2023, we also experienced a 10% drawdown, yet the S&P 500 was also up more than 20%. This year, I think it just feels, and I think the technical term is, it's more in your face. You can't avoid it. It's in the news. We're hearing it every day. We see it in tweets. We see it on Truth Social, wherever you go to see Trump's tweets. But it's just more in your face now, which makes it harder to ignore as an investor.
But, you know, Sarah, to that point, yes, more in your face and perhaps not exactly like the first term of President Trump. Having said that, we're having questions where people are wondering, American exceptionalism, no more, questioning folks whether or not the U.S. is uninvestable and saying, yeah, maybe so because of different policies and pulling back kind of from the global market trade potentially. And I guess time will tell ultimately how much sticks and what this means for the U.S. economy. But I look at, the WEI function really well on the Bloomberg, and the Euro Stoxx 50 is still up almost 11% this year. I look at the S&P 500, it's down 2%. So money has been going overseas. Are your clients saying, wait a minute, I got some concerns about really the U.S. market until we see whether or not these policies kind of settle down? So give us some color around that, if you would.
Money has been going overseas. There's no doubt about that. As you mentioned, Carol, if you look at how the different global indices have performed year to date, you look at China indices, you look at emerging markets, you look at developed markets internationally, they're all outperforming the United States. But is it uninvestable? I think that is much too harsh a term to use to describe the United States. And we're still very optimistic on U.S. equities. Sure, we've seen a big hit to tech, which has really, at the end of the day, driven the sell-off that we've seen. I think a lot of people would be surprised if you looked at the sector breakdown of the S&P 500 this year. Only 2 sectors are actually down. The rest of them are positive. It's just that those sectors have the heaviest weights in the index.
Right.
So I do think, look, it does highlight the importance of global diversification. We've always kept exposure to international in our clients' portfolios. We are now discussing possibly increasing that exposure a bit. But at the end of the day, if we look at where we still want to be invested over a longer period of time, it's still a lot of these U.S. tech names.
Why is that, though, Sarah? Why do you want to stay? Why is that?
What'd you say?
Why is that? Why do you want to stay invested in U.S. tech companies right now? We
Because
talked to
when
Peter
we look
Atwater
at
last week,
future-
who has some serious concerns about the U.S. market.
When we look at future growth projections, and if you look at the amount of money that is being spent on artificial intelligence and projections for what that is going to mean for revenues in the future, it's still very strong. And we've seen, some of these tech names, we've seen some pretty high double-digit corrections in some of these names. So we're looking at this more as a potential buying opportunity. Even, yes, we could see more volatility. Things could get a bit worse. I don't think this is it. I don't think, okay, we had a strong day. That's it. We're on the up. We're not going to see any volatility anymore. But if I look at, the United States growth potential versus that of, China or Europe or emerging markets over the next 5 years, for us, U.S. is still the place we want to be. And it is largely because of that sector makeup.
But have you been advising clients to kind of be buying all the way back to mid-February when we started to see the S&P go down?
No. So what's interesting is it actually seemed to me as though sentiment was the worst when the market was only down 3% or so, because headlines were just flying. We got a lot of calls from clients that, in those early weeks, and we kept saying, we're due for a correction. This is likely going to get worse. Don't do anything quite yet. When we started to get towards the 10% correction mark on the S&P 500, that's when we started to say to clients who have a lot of cash on the sidelines, have been looking to nibble, say, look, you don't need to do this all at once, but you can start nibbling here, start buying in, start buying the dip. And what's really interesting is that if you look at the data, if you look at the numbers, if you look at corrections that occur within a bull market, and I know that's a caveat because I'm saying that the correction is not going to turn into a 20+% correction. The reason I'm saying that, though, is bear markets are pretty uncommon. They happen on average once every 7 years, and we just witnessed one 3 years ago. So that would be very soon to witness another full-blown bear market. But if you look at corrections that don't then delve into a 20+% correction, they tend to be good buying opportunities. So if you're an investor who bought in after stocks had fallen 10% on average, the next 3, 6, and 12-month returns are 8, 13, and 19%. It's not too bad.
To be fair, we're only down about 6% from all-time highs on the S&P 500 right now after today's rally.
It's not terrible, right? No. Considering the run-up that we've seen in the last couple of years.
It's a little bit of a shift than we saw a week ago.
The tone definitely feels different today. Hey, Sarah, thank you so much. Great to talk with you. Sarah Ponczek, she's financial advisor at UBS Private Wealth Management out there in Florida. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, just about 7 minutes to go until we head over to our TV colleagues, and we're going to count you down to the close on this Monday. Holding out of that rally, we're pretty much hovering around our best levels of the session on the S&P, the Dow, and the NASDAQ 100. So positive tone really throughout the day for the most part. So we'll get into the close in just a moment. In the meantime, company that we have talked about a lot on air, have featured its co-founder. We're talking about 23andMe filing for bankruptcy after failing to find a buyer and rejecting a buyout offer from the co-founder.
Despite collecting DNA from saliva samples from more than 15 million customers, the company hasn't been profitable since it went public back in 2021. Now, and this has a lot of people concerned, Carol, the personal information can now be sold as part of a court-supervised auction, 23andMe said in a filing.
That is great, Greg.
Did you know what?
I've never done this.
I am just going to give a little hat tip to my mom.
Who did this?
No, who was like, why would you ever send your DNA to a company? She told me that like 10 years ago, and I was like, Mom, it's fine. She and
my husband would get along really well because he's like, what?
I didn't do it. My sister
either.
did it in our family.
I have a family member who did it.
Yeah, so now we're all
out there.
Yeah, the police are going to be knocking, maybe, Carol Massar.
Hey, I don't want to know about any other sibs I might not have. Parents were married for a long time, loved each other very much. Just saying.
That is a great story about this company that we've covered a lot over the last few years.
What?
A Business Week story that was written about 23andMe, how one of the unintended consequences of this was like, hey, here's a sibling coming, knocking.
It's crazy. It's so funny.
Everybody's got a story.
When that story hit in Business Week, so many people came up and like, oh yeah, well I know so-and-so. Or like I have a cousin, or I have, it's pretty crazy. That story though also got into, 23andMe was trying to get into drug development. Yep. That was maybe, or hopefully.
It was back in like 2021.
Yeah. The plan like for alternate revenue, right? And using information, I guess, to share with drug companies. That really didn't pan out. And so here we are. Yeah, I mean, think about it. The company struggled to turn single transaction customers into reliable and profitable subscribers. Once you've done it once, why would you ever do it again? Today, 550,000 customers pay for the company's two primary services. This is according to Matthew Kavarda, who is the chief restructuring officer. Those services produced 76% of revenues during the latest fiscal year. It ended March 31st, 2024. It's like the ultimate information on yourself.
Some good lessons
out there
to come
in a
from
database, right? Right. Like you think about that. I mean, I don't know. And it isn't just a choice you make for yourself because you open it up to all your family members, right? It's out there now. Interesting, I don't know. But what a fascinating tale in terms of a corporation, right, that created a business. And I think for a long time, so many people talked about it. Think about all the TV shows that were kind of branched off of it in terms of understanding your background.
Yeah, I think there was a PBS one.
Yeah, exactly.
So this Chapter 11 filing in St. Louis, it's going to resolve some legal troubles related to data breach back in 2023, as if it's not enough that you don't know where your data is going.
Yeah.
Don't forget about this hack. It comprised information about roughly 7 million customers, including giving a hacker direct access to about 14,000 user accounts. The company faces about 35,000 claims related to the incident.
Yeah, it's kind of wild. It's a lot of information in a day, an era where we know information is worth a lot, especially stuff like this. Anyway, great story. If you want to know more, although we covered most of it, I think you can check it out on the Bloomberg or at Bloomberg.com.
That's funny.
We are heading into the close. Just a quick check on the markets. Some buying into the close again. What some would say is a positive sign because right now you're looking at the S&P 500 at its highs of the day, up 1.8%. Tim, the NASDAQ 100 up 2.2%. So again, it started out with futures early this morning being positive. We got off to a higher open, and we've just seen momentum build. Yeah,
look at that. Consumer discretionary up 4%, really seeing the tech trade higher today. Tesla just ripping higher. Is that one of your gainers, Carol?
Yes, it is.
All right.
I did them earlier.
Okay, good.
The Max 7, man, they've all been up. I know. It's been one of those days where I feel like I've already lived a week. I have not. All right, over to our TV colleagues. The closing bell starts right now.
Starts right now.
The
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to that closing bell with a global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Massar and Tim Stenovic in the radio booth as we welcome our audience across all of our Bloomberg platforms here on a relatively positive Monday afternoon, at least for
positive
U.S.
because
equities.
you're back, Romaine. Welcome back.
Thank you, Tim.
He brought the.
You know, I was in your neck of the woods, Tim, out there in California.
I was out there too. Why didn't we hang out?
What?
I was out there the whole week.
Oh, okay. Well, there you go.
You were in Northern
you see how
California
close we
too,
are.
weren't you?
I was. I drove past the Stenovic household.
This is a little messed up because I was also out there.
Okay.
We were like ships passing.
All right, we need to talk after the show. Okay.
Yeah.
Carol, I have no idea where you were.
You guys got to get your people to talk to each other so that you guys go out for a drink or something. I'm here and...
I know. You know how much you could have saved on a hotel if I just could have crashed at Tim's house?
Yeah, you probably would have called and like just got his voicemail. I'm just going to say. No. Hey, what an interesting day. Futures were higher. We saw the market open higher. We saw momentum build, and we saw some buying into the close. So a positive day. We'll see whether or not it holds into the rest of the week.
Yeah, I mean, everyone's buying everything today. Bitcoin's even higher by 4%. You got Ethereum higher by 5%. XRP up 2.8%. It's not just equities. We're also seeing buying in crypto.
And everyone's looking past the manufacturing data that showed manufacturing contraction, also an increase in materials costs, which points to stagflation, kind of echoing what the Fed had indicated in its latest economic projections. But it's a worry for another day, I guess.
Yeah, and I'll just say it again. Looking at the Russell 2000, for example, the best day since November 6th. That ain't nothing from the day of the last election.
Yeah, and there are going to be a lot of superlatives here as we get the closing bell. You were pointing out early the Mag 7 as a group having their best day since, I believe, January. Discretionary stocks, consumer discretionary stocks, best day since 2022, believe it or not. Wow. That's a big part of the reason why you're seeing the S&P up almost 100 points or about 1.8% here on the day. The Dow Jones Industrial Average up more than almost 600 points or about 1.4% here on the day, while the NASDAQ Composite is going to close out the day up about 2.3%. And the Russell 2000 getting in on the party and, more importantly, leading the party, a melon party, up 2.5%.
Yeah, that's pretty significant. S&P 500, guys, most names in the S&P 500 higher today. Scarlett, 424 to the upside, 78 losing ground today.
All right, let's show you the IMAP because it's pretty a pretty basic IMAP here. All green, with the exception of utilities, little changed on the day. And as Romaine mentioned, consumer discretionary really in the driver's seat, up 4% as a group led by those auto companies. Communication services also gaining about 2%. And industrials in third place, up 1.9%.
It's not just auto companies, it's Deckers. Don't they make those like ugly shoes you like?
The Uggs, yes, they do.
Yeah.
Wow, harsh shade.
That's okay. He already shames me on the Birkenstock, so this just goes with the territory.
If you have bad feet, you need the Birks, all right?
I think Romaine wears Birkenstocks with socks on the weekend.
100% does not.
Oh, come on. All right, let's get to some of the individual gainers, guys. Tesla finishing just off its best levels of the session, but still up about 12% here in today's trade. Number one gainer in both the S&P 500 and the NASDAQ 100, and leading really gains among the Magnificent Seven, as we talked about that whole group higher in today's session. I think just a sign that the risk on trade, is back on, but we've seen Tesla up several days in a row, so some upward momentum certainly in that one continuing. FedEx, also a gainer in today's session, up about 5%. Reported earnings last week. Stock dropped when it reported earnings and cut its outlook again amid economic worries. Well, the economic bellwether actually rallying today. Jefferies turned bullish, confident in the company's ability to continue to grow earnings regardless of top-line trends as it executes on its cost-cutting plan. So investors liking that news and moving into that one. United Airlines up pretty much at its best levels of the session, up more than 7%, was a top gainer too in the S&P 500. United will begin charging customers more to access its airport lounges to help combat a rise in overcrowding since the pandemic. We're going to talk a little bit more about this when we get into some of the stories on our radar, but we'll get into exactly what they're going to charge for that. But nonetheless, this was a big-time outperformer today.
There were some good gainers today, Carol.
Yeah, thank you very much.
Sure thing.
Occasionally I get it right.
Hard to find decliners today. I actually had to go abroad to find some decliners because the U.S. market was so strong today. I do want to start with Supermicrocomputer in the S&P 500. Shares did fall after Goldman Sachs cut their recommendation on the company to sell from neutral. As of the last close, though, the stock is up 38% so far this year, falling today by about 1%. And then Novo Nordisk, ADRs of Novo Nordisk here in the U.S. fell by 2%. It has been unseated as Europe's most valuable public company. Now, SAP, the German software developer, is on top. Novo lost the top spot in Europe after its shares roughly halved since reaching a record high. That was back in June of last year. The stock got another blow today after Intron health analysts downgraded their recommendation to sell from buy. And finally, to Brazil we go, where we find Embraer. ERJ US are the ADRs here, down 6% today. Wolf Research out with a note cutting its recommendation on the company to peer perform from outperform. Once again, shares down by about 6% today.
Do you have any Asian stocks on there?
No, not today.
Okay.
Maybe tomorrow.
All right.
Maybe next time.
You covered like 3 continents. So
I know.
People are buying
It was
overseas.
kind of grim for decliners here, guys. You know this.
All right, talk about decliners. Let's go to the bond market. It was selling pretty severe, pretty much all across the curve. Whether you look at the 2-year, 8 basis points, or the 10-year, also 8 basis points. And we have $69 billion worth of 2-year coming on tomorrow. And we have the economic data. Ira Jersey, Bloomberg Intelligence, says he thinks the takedown is going to be pretty good for the 2-year. And we get 5 and 7s later on today as well. He said you'd have to double the yield for you to lose money in the 2-year if you bought it right now.
Yeah, wow.
That's a lot.
I'm sorry, though. Can we just go back to something that Carol was talking about? Because she was talking about United Airlines, the stock rallying on these lounges things. You might be in trouble. But here's the thing. So you're saying, so United has finally recognized what we've all known for years now, which is these things are way too crowded, these airport lounges. So now they're going to raise the standards to get in there, right? The price or the miles that you need to get in there. And is that, in theory, that's going to drop the number of people?
Supposedly.
Or limit the number of people.
Amex
but they're only raising it from like $650 to $750, so it's like basically $100 difference.
Yeah, I don't know.
Do you use lounges, Carol Masser? You probably like to sit out.
Yeah. I think I've traveled with you and seen you in a lounge.
Yes, actually, that is true.
Holding court in the lounge. I think I've seen you doing that.
Well, I think Amex maybe last year or the year before changed their policy with the Platinum card because too many people were getting in. So now you have to spend, I don't know, like a lot of money, $70,000 or $80,000 a year on one of the cards in order to get guest passes for free.
Yeah.
But yeah, I mean, these things, like everything else in life, is getting more and more crowded, and there's a willingness to pay for people. So we'll see if it actually makes a difference. But I think that it could be tough to decrease the crowd.
But increasing the fees from $650 to $750 is just $100 more, but it keeps some of the riffraff out, and it's the starting phase of increasing more, right? Oh my God, I can't believe I high-fived him on that. But no, the idea being that once you start raising prices, you kind of set the precedent for doing it again and again and again. At some point, it'll get to the level of folks that Romaine is comfortable with.
Wow. You guys.
When will that be?
All I have to say is I spent a lot of money on my Amex, and my husband gets the perks because there's some weird sexist thing that it's under his name and not mine, and it's very upsetting. So he can get to the Delta Lounge, and I can't. But I do all the work.
Wow.
Yeah. Harsh words.
Drama in the Steele house.
Yes.
Wow.
Riffraff there.
Okay. All right. Well, if anybody needs a laugh, we're going to move on to this. Great story. And I have to really credit Tim because he's like, you got to check this out. Do this as a gainer because initially this stock was really high in the pre-market. I think up like 16%. It was up more than 2% in today's session, I think finishing the day little change. We're talking about Primo Brands, and they are home to Saratoga Spring Water. And an influencer by the name of Ashton Hall has put out a video, and I can't believe we're not going to show it because it's really...
Have you seen... You guys have all seen this, right? In the memes over the weekend?
Wait, this is the blue water bottle, right?
So,
the blue glass water bottle.
So can I just say, I saw this while I was on vacation. I had no idea what the whole point was, but I saw it just took over everywhere. I mean, I was more focused on...
your own
I was more focused on the
right?
fact that this guy apparently...
He's trying to get into the lounge.
He looks way better than me on my body. So I was like, so I can drink this water and look like him?
670 million views as of this morning. Okay, these videos. It shows sort of his routine, and the routine involves a very strategically placed bottle of Saratoga mineral water. And apparently investors, at least earlier in the session today, thought, okay, maybe this would lead to some sort of sale. A lot of memes over the weekend of people going out and buying bananas, filling up buckets of ice.
I'm sorry, I just have a question. Was what he did, the original video, was that supposed to be a joke or was he serious?
That's a question for
because if he was serious, I have some concerns.
It looks pretty serious to me. Let's just say
because he's like dipping his face in cold water. He's putting on a little thing on his nose.
Hey, but those are for your pores.
You rubbed the banana peel all over your face. Did you see that part?
I did see that.
Okay, good.
I assume this guy has no wife and kids or any sort of responsibilities other than just taking care of his body.
There was a woman's hand that came in at one point and put a bottle down, I think.
I did see that.
So.
His assistant.
A little piece.
I'm still watching it, guys, so I'll get back to you.
Okay.
Oh, here's the banana. Okay, I get it now.
No, don't fall for that banana in the tailpipe.
All right, on that note, we're going to move along. All right, that's a wrap.
We've gone off the rails. Remember we used to always go off the rails here on Beyond the Bell or wherever we're calling this?
We used to. We used to.
Nowadays.
I don't know, closing bell, whatever. Yeah, I know. All right, that's a wrap. Our cross-platform coverage of the close on radio, TV, YouTube, Bloomberg Radio's. Folks, good to have Romaine back. We will see you again, same time, same place tomorrow. I know Alex is going to head out. She's going to continue watching that TikTok video. Scarlett and Romaine continue on TV.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Massar. She has...
I now have four bananas.
All of the bananas.
I said I was hungry.
You just need that Saratoga water, bucket of ice, bowl of ice.
I'll tell you, the bucket of ice makes complete sense. Have you ever done that when you've got like a sore foot or something and you just do ice water?
You put your whole face in it.
It's also good for the pores. It's good for the pores.
Right, cool.
Yeah, it's like we need, we'll talk about this later. We got more important stuff
We
to
do. Hey, stocks rallied today. The S&P 500 up 1.8%. The NASDAQ Composite up 2.3%. Signs that the U.S. tariffs will be more targeted than anticipated, reducing the appetite for safety. Oil climbed as President Trump said he would seek a 25% tariff on nations buying crude and gas from Venezuela. Doug Sioka has been watching this closely, CEO and partner at Kavar Capital Partners. Got approximately $1.5 billion in assets under management. He joins us from Leawood, Kansas. Doug, we got your notes early today before we really saw this session take off. And you argued that there was this TIP, tariff implementation paralysis. It seems like markets have gotten past that today.
Yes, thanks, Tim. It's a fluid situation, like you said. I think we hit the pressure release valve today based on Friday afternoon's announcement that was corroborated over the weekend that the maximum impact of the tariffs might be a little less than the market had been pricing in. But this TIP, tariff implementation paralysis, is a real thing. I mean, you're talking about sectoral tariffs, secondary tariffs, reciprocal tariffs. Oh, and we're couching those within whether they are national security variety or the trade war variety. So there's a lot of cross-pollination of tariffs and led to a lot of investor consternation for sure.
So do you view today's buying, Doug, as a good sign or just, all right, things have been beaten down a lot. Let's just do a little bit of tiptoeing back in. It's not like we were up 4, 5, 6, 7%. So it does feel like to me that there's still some investor hesitation, but it definitely had a positive tone. How do you read what we got in today's trade?
Yeah, that's a great question, Carol, and thank you guys again for having me on. Like, if you think about our financial markets and the economy, right, they're dynamic systems, right? And as such, they're constantly evolving. But the most basic characteristics of dynamic systems are 4 things, right? 1, stability. 2, instability. 3, oscillation. And 4, chaos. And I think when we're in chaos mode, within which the current administration seems to exist very comfortably, then in general, you want to abide by a few different guiding principles. 1, focus on valuation and not on price. Right? Just because a stock falls from 450 to 220 doesn't necessarily mean that is a cheap stock. It might be a very judicious re-rating given the underlying context where we think those profits may grow over a period of time within the prevailing economic environment. Number two, focus on rebalancing, right? The market got so oversold. You guys have talked over the last couple of weeks about some of these sentiment indicators and how quickly they've reversed course, like head snappingly quickly. We went from everything's awesome to we're near an Armageddon scenario. So that gives incredible opportunities to rebalance when things get oversold like they have, which can lead to a lot of buying interest culminating in a single session like today. And the third thing you want to do, this is particularly for wealth management clients like those at Cover Capital, is embrace the context of a financial plan and how you can take opportunities to adhere to that, given the shifting dynamic system within which we're navigating on a minute-to-minute basis, right? In general, I was saying this to Paul, Trump is turning investors into day traders. And when that happens, you're going to see price gaps that, with a long-term perspective, are going to offer awesome entry points.
When do you think that's, like, how do you see that playing out here? I mean, do you see that we're going to see more volatility ahead, despite that it seems like confidence is kind of back?
Oh, without question, Tim. Without question, we're going to see a lot more volatility, right? Because you also have to keep in mind, this is taking place after 2 incredible years in the S&P 500, consecutive years in the S&P 500, right? We needed to have a little bit of a shake up of optimism and sentiment in the environment. We needed a little bit of re-rating that would keep people's expectation more in line with reality. So I think it's a process. There's so much emotion attendant to this environment. I think it's obscuring what is an otherwise economic decision-making system by investors, that it's throwing a lot of it up in the air in a single few, let's say 3 or 4 week session, 3 or 4 weeks of sessions. As it assimilates, that volatility may dissipate, but ultimately it's something we need to brace for throughout, I think, the bulk of the first half of the year.
So if we go by this tariff implementation paralysis, Doug, and if investors are shrinking their time horizons, can we shrink it so far down that the U.S. market, something Tim asked one of our guests last week, that the U.S. market becomes uninvestable?
No, I don't think so at all, Carol. I think, if anything, this TIP is making the market more investable. But break it down by asset class. So within stocks, right, lengthen the time of your deployment out of respect to the expectation of ongoing volatility. Capitalize on the persistence of price dislocation. Focus on the destination, not the journey. We're all told, oh, don't worry about the destination, it's the journey that matters. When you're making investment decisions, it's the destination that matters. So there's going to be some gruelingly volatile sessions, but ultimately, I think this economy arrives on firmer footing, so it becomes that much more investable with every extended period of dislocation. For bonds, right, that's really challenging right now, right? We had the opportunity to extend some duration after the Fed began cutting rates last fall, which is a little bit perverse and counterintuitive. But now, because of the equity volatility, you've seen a massive rush into fixed income. So that duration extension potential has really been contracted. It just doesn't exist as much as it did. And then you have the administration. And there was a great piece in Bloomberg over the weekend that was written by Liz Capel McCormick and Ye Sheye that talked about the Besant put. Right, the Besant put is a real thing, right, where this administration is going to try to suppress interest rates with energy efficiency, with reducing the number of auctions at designated dates, which is going to suppress demand, which is going to increase price and lower yields. And then also the result of some spending cuts should they extract any through this DOGE initiative. So there's really good opportunities in fixed income, but I think it's going to become more and more challenging, over a period of time, because I don't see rates really running and spiking and the yield curve getting super steep anytime soon.
One last question I want to ask you, Doug. What is the cost, though, potentially of tariff policies, pushing back on allies, upsetting and possibly upending the global supply chains? We talked about maybe levies or costs on Chinese ships and the impact that could have on the global supply chain and global shipping. Right. I mean, none of this goes unnoticed by the U.S. economy potentially, and a lot of it can be inflationary. What is the potential impact so that the U.S. market becomes a hard place to invest in? And just got about 30 seconds.
Yeah, I think those are really big questions, Carol, because I think in a worst case scenario, which would be the U.S. orchestrating consecutive unforced errors, it does then lessen the attractiveness of foreign capital to come into our markets, which becomes problematic. Now, the onshoring, the reintroduction of manufacturing in our economy is going to happen. It's just a longer process. So I'm hopeful that kind of the underlying forces of collective profit-seeking self-interest globally will overtake sort of the short-term initiatives of the new administration.
All right. Always good to check in. Doug, be well. Doug Sioka, CEO and partner at Kavar Capital Partners, joining us from Leawood, Kansas, about $1.5 billion in assets under management. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. An up day, and we begin with a developing story. Cintas terminating its deal talks with Universe, and Universe shares, they are falling roughly 10% in extended trading. So it was an update today for the Dow, the S&P, and NASDAQ. And this update, this Bloomberg Business Flash, is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. S&P 500 index today up by an even 100 points. That was an advance of 1.8%. The Dow up almost 600 points, up 597 and a decimal, up by 1.4%. We had the NASDAQ Composite Index surging 2.3%, up 404 points. The 10-year, 4.33%. The 2-year, 4.03%. Spot gold down $11 the ounce, 3,011, down 0.4%. And West Texas Intermediate crude up 1.4%, 69.20 for a barrel of WTI. Bottom line here, stocks extending the rally as President Trump signals tariff breaks. United Airlines, as we have been reporting, will begin charging customers more to access its airport lounges to help combat a rise in overcrowding since the pandemic. Again, recapping the Dow, the S&P, NASDAQ all higher today, with the S&P 500 index advancing by 1.8%. Spirits are back. Animal spirits are back. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, always with the perfect segue, Charlie Pellet. The Business Week Women in Leadership segment is brought to you by Visa and Visa Foundation, connecting small businesses to the digital economy. Today, and especially International Women's Day, they are committed to uplifting small businesses for growth.
Well, President Trump has threatened a 200% tariff on all alcoholic products shipped from the European Union, dispaying drinkers, restaurateurs, bar owners, and suppliers across the U.S. A reciprocal tariff-free trade agreement that has existed between the EU and the United States since 1997 could be ripped up as a consequence of Trump's anger at a European levy on America's native spirit, otherwise known, Tim, as bourbon.
Well, we are very interested in how the U.S. spirits industry is viewing all of this. Allie Anderson is CEO at Craft Co. It's a company that has more than 24 spirits and liqueurs, including gin, vodka, bourbon, rye, and ready-to-drink cocktails. She joins us from Alexandria, Virginia. Allie, good to have you with us. How are you?
I am well. Thank you, Carol, Tim. Good to be here.
Hey, before we get to exactly the impact of tariffs, explain your portfolio here, because I want to understand what exactly you have, if you make it or if you just license it. What are the intricacies here?
Oh, great question. Great question to start with. So Craft Co. has 5 different brands that are distributed all across the United States. We make these brands. We do source our whiskey. We distill our gin and our vodka. We've got everything from the value end of the spectrum, where if you're just trying to get into whiskey and you're not quite sure where to start, all the way up to ultra premium luxury whiskeys that we spend quite a bit of time blending and finishing. So there's a lot to dig into with our portfolio. We also have a range of RTDs, which are very popular right now.
The ready-to-drink cocktails.
Yeah, ready to drink. Great. Yeah, canned cocktails could not be bigger right now. They've been on the climb now for a couple of years, so we've got those as well. And then some liqueurs. So if you're just, into the the lifestyle thing, where you're not interested in 100 proof whiskey, we've got some liqueurs that are very flavor forward and lower proof. So you can throw them in your seltzer and still be able to enjoy a good time.
So I'm wondering about the tariffs and how you're viewing this. Do you export at all?
We currently don't export, but here's the thing about tariffs is that they affect everybody, whether you export or not. In fact, this was going to be our year to start exporting. So naturally, we're disappointed here at Craft Co. We're in 42 states right now, and that's definitely affecting us. I think, when we talk about tariffs and think about it, we first of all commend the administration's objectives to protect the American people, to support jobs in the United States, but we are concerned that those tariffs just really don't contribute to that effort. In fact, we think it harms the American jobs. You look at something like whiskey, right, which starts with the farmers who grow the grain, and we're very connected to that process. And then you move to the small business guys like us who distill that grain. Then you move on to the distributor whose trucks take it to your favorite bars and restaurants, and eventually that bartender that you've got a relationship with, where you go to get that great dependable glass of whatever your spirit is. Those are all the people in the supply chain that are really affected by this, whether you export or not.
So you were going to export this year, but because of tariffs, you're not going to?
That's right. Yeah, we were going to export to Canada and to the EU. And certainly now, of course, we have to pivot, and that's what we do. We're a small business. We can absolutely do that. But it does create a lot of price pressure and certainly a lot of competition at the shelf that, the over 3,000 small distillers in this country now have to contend with. Where's all that supply going to go? It's going to come right back here to the United States.
Yeah. How much has that changed then your business story and how you think about 2025, Allie?
Great. Yeah. So what it does for us is it really concentrates what we do at home. So we're based out of Holland, Michigan, right there on the lakeshore. We're super proud of it and we love it, as are the Michiganders all over the state. And so what we do is we're concentrating our strategy to be experience-based. So we're going to reopen our tasting room here very soon, and it's going to be an experience where you can come, you can sit down, you can connect, you can talk maybe about how tariffs are hurting your business. You can celebrate the best of what we have, which is an American spirit.
Well, it's interesting too. The whole story of tariffs, it's obviously changing your plans for going overseas. There are concerns, though, that all of this ultimately is going to impact, as you said, this impacts farmers, drivers. So many people get impacted potentially by tariffs and not being able to access markets outside the United States. Are you beginning to think about a slowdown in the U.S. then as a result? Are you beginning to think about a possible recession and making business plans for such?
Oh, we certainly are. I think, we've seen a lot of the, what we do at Craftco's, we look at the broader context. And so we're seeing the larger producers start to pause production. We haven't seen that for many, many years, right? We had this huge bourbon boom going back to 2005, all the way up through COVID. We've all heard about the whiskey glut and the COVID hangover, and things are slowing down. And in the industry, we call that normalization. So we very much see this as cyclical, not structural. We've certainly weathered tough times in the spirits industry before. But to your point, Carol, it really is the hardworking Americans, the corn farmers, the truckers, the distillery workers, the barrel makers, the bartenders, the servers, the communities that ultimately depend on this for economic reasons, but then also just to connect, right? To connect communities. I think it's gonna be a tough road.
Allie, is there a belief, and I think this is something certainly everyone across the U.S. and those of us who report on policy out of the White House are trying to gauge, especially since as tariffs have been talked about since President Trump came back for a second term, we've heard things and heard, something different potentially an hour later or the next day. And so it's fluid is how we are describing it. Is there an expectation that potentially this is a shorter term thing and that ultimately overseas markets will reopen again? Or is there a concern that other markets are getting nervous about what the U.S. is as a trading partner and will look for longer term solutions to get, whether it's alcohol, whether it's their bourbon, whether it's what have you, in the future? I'm just curious if you can game that out.
Yeah, it is. It's a game of ping pong right now.
Yeah.
I think that's why. So we take the stance, at least in our small business, of being flexible, of rooting down into what we can do domestically right now. And we've got a fantastic distribution network. We really do have good partners that way, but they're experiencing pressure as well. One of the other things I think that's really interesting about this is that spirits is unique in that you can't make tequila or bourbon, which are very designated, distinctive products that can only be produced in certain geographical areas around the world.
Good point.
That's very unique to these. And, to even argue on the other side of it with champagne and with cognac and Irish whiskey, right? So it really is something that affects all of us. And I think generally in the spirits industry, we're all very cooperative. I think we've been the model for what is fair and reciprocal trade, 0 for 0 tariffs, as you mentioned at the top, since 1997. So that's, we've done it well. We've done it right. We hate to see that get broken.
What would you say to somebody listening or watching right now who says, wait a second, if we put tariffs, the U.S. that is, 200% tariffs on all alcoholic products shipped from the European Union, shouldn't you embrace that, Allie, because you're an American company, and then you don't have to compete price-wise with the imported gins, the imported vodkas, the imported spirits?
Yeah, I can see where that might be the case. I think for us, a rising tide raises all boats. And that is something we've done for a long time. It's something we believed in. Competition is never a bad thing. It creates innovation. It creates new categories. So yeah, we absolutely want to see.
So you're in Alexandria, Virginia right now. You're close to the U.S. Capitol. Are you able to lobby? Are you able to communicate your concerns to Washington, D.C.?
Oh, for sure. In fact, I'm part of, CraftCo is a part of Discus. I sit on the Craft Advisory Council. I'll be at the Discus annual conference here in a couple of days, Wednesday through Friday this week. And there certainly is an active effort underway to get to Capitol Hill and say, listen, we fully support the objective to protect people, to protect jobs, to be America first. We absolutely support that. What we're looking out for here is jobs, economy, innovation, trade, relationships, and the long-term health of the industry as a whole.
Ali, what can you tell us about the consumer and consumer strength at this point? And maybe, I don't know, it's a case of what the consumer was feeling at the beginning of the year and what they're feeling now, if you're noticing any change.
Consumers, they drive what we do, right? Consumers are all about preferences. When lifestyle shifts happen, I think that's something that challenges us to respond. I mean, we are consumers ourselves. And so often I can speak for my company when we're sitting around the table and we're trying to figure out what could be the next great thing. We did this several years ago with a product we have called Cigar Blend. We were the very first at Joseph Magnus to bring that to market. And that really was just born of things we like, right? What do we want to see in the market? And so today, I think the customer is saying, what do you have for me? What do you have that's different? What do you have that fits my lifestyle?
Right.
How can you dazzle me, right? Keep me interested. So they're very, very happy. Everybody does a ton of research today.
Right.
And we're thankful for it. They keep us on our toes.
Just quick to follow, but in terms of actual consumer demand, are consumers slowing down? Or are they being pinched and only got about 25 seconds? Are you seeing any signs of that? Yeah.
We are seeing a little bit of a slowdown. Like I said, we call it normalization, but we're seeing consumers make not worse choices. They're actually making very healthy choices. They're all about quality and not quantity now.
All right, going to leave it there. Great to get some time with you. Thank you so much. Ali Anderson, she's Chief Executive Officer of CraftCo, joining us from Alexandria, Virginia.
Hey, just a couple of headlines here crossing the Bloomberg terminal. American Electric Power to offer $2 billion of shares. Taking a look at the trade after hours right now. At first, you had a little bit of a dip.
Yeah.
But now we're back to where we closed.
Yeah, the net proceeds for general corporate purposes. So anyway, as Tim said, launching a $2 billion public stock offering. Tapping into the market, right?
Hey, speaking of the market, AI, huge right now. Rachel Metz is joining us on the other side with the latest from OpenAI. That's next on Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. An almost 600-point gain today for the Dow Jones Industrial Average, up 1.4%. Stocks powered a risk-on rally on Trump tariff signals, with the S&P up 100, up 1.8%. The Nasdaq Composite Index up 404, up by about 2.3%. 10-year at 4.33%, with a 2-year 4.03%. Gold down 0.3%, 3,013 the ounce. West Texas Intermediate crude up 1.3%, 69.15 for a barrel of WTI, and a surge for Bitcoin, 88,071 right now on Bitcoin, up by 3.5%. Sarah Ponzik is financial advisor at UBS Private Wealth Management, and right here on Bloomberg Business Week, she told us you got to keep the recent selling in perspective.
If you look at the correction that we saw in the stock market, at the end of the day, it was very normal. And frankly, we were overdue for one. We had 2 straight years in which the market was up more than 20%. And even in the last 2 years, a lot of people forget we saw corrections in each of the last 2 years.
Sarah Ponzik of UBS Private Wealth Management. Techs with a standout today. Names including Tesla up by 11.9%, NVIDIA up 3.1%, Apple surged 1.1%, Meta Platforms up 3.8%, Alphabet, parent of Google, up 2.2%. But again, Tesla bears repeating, up today by 11.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Lots going on in the world of AI, as there is each and every day. Higher use of chatbots such as ChatGPT may correspond with increased loneliness and less time spent socializing with other people. This is according to new research from OpenAI in partnership with MIT. Also, speaking of OpenAI, the company expanding the role of its COO and elevating 2 executives to the C-suite as Sam Altman, who is the CEO, shifts more of his focus to the technical side. Rachel Metz is a Bloomberg News AI reporter. She joins us from our San Francisco bureau. Rachel, I want to start with this study about communicating with chatbots such as ChatGPT. What did MIT and OpenAI do with this study to try to understand?
So they talked to almost 1,000 people. They included almost 1,000 people in this study, and they had them use ChatGPT in a few different ways. They gave some people access just to a text-based version of the chatbot. Some people had 2 different varieties of voice that they could interact with, and they had them do specific types of tasks with it, sort of general types of tasks, and they found a few different things, and I will caution that it's very early, so there's a lot more to be done here, but they did find that there seemed to be a sort of a relationship between time spent using the chatbot and some loneliness that people may feel.
I want to be like, shocking.
Yeah, I know. Carol's not exactly
surprised. Go into a corner and sit there and talk to a
chatbot and not a person?
And not a person.
You might become lonely?
And you might become lonely. Sorry, Rachel.
No, it's okay. I mean, I think what's really important to remember here is that some of this could be related to how people were feeling beforehand.
Yeah.
You know, it's really tricky to study this stuff, and there isn't a lot of scholarship that is like as intense as what they did. The fact that they did a randomized controlled trial that was approved by a board is really a great sign that they were trying to do some serious work here. It's going to be really interesting to see sort of like what the follow-ups are, what they come up with after this, and in particular, if there's any more looking at exactly how much time people are spending. They weren't actually controlling for time in this experiment. It was just something they noticed. So they didn't want to, they didn't want people to draw too strong conclusions from it, but I think it's really interesting and a very fascinating area for more study.
And I will say, sorry, I didn't mean to be obnoxious, but I guess what I would say is I am glad that they're starting to look into it early, right? Because most people would say with social media, it wasn't until it was so entrenched, it feels like, in our system that people are like, wait, look at what it can do. And so I am kind of glad that it's on people, boards, radar that say we should start studying this, Tim, early on.
But Rachel, it also comes at a time when, there's a lot of concern about kids' relationships with these chatbots. One of your colleagues in San Francisco did this just heart-wrenching report that came out last week about a suicide with an AI chatbot. So that's one way to think about it. Another way to think about this too is it comes at a time when companies are thinking about, wait a second, can we use this technology to actually help people with their emotional states? Can we use it like a therapist talks to a person? Can we use a chatbot for that? How do you think about this technology? You're in this each and every day, Rachel.
Ooh, that's a good question. I mean, I think and I hope that there needs to be more research done. I hope there will be more research done. I think just like a lot of technologies, if something is dependent upon a lot, if you're really intensely using it, that could lead to things that are not great. I mean, it's important to go out and touch grass, right? Mm-hmm. So right. I think that it's going to be interesting just to see sort of like what unfolds over the next few years. And also, this could be helpful to companies. This sort of research could be helpful to companies in figuring out ways to better design. And that would be my optimistic takeaway, is that OpenAI and other companies will look at results of research and say, okay, well, what can we do to design our products better so that there aren't, or so we can minimize bad effects?
Right. Maybe create some guardrails of some sorts, right? As they
or more than they already have. Yeah.
Yeah. Exactly. Tell us a bit more too. You know, there's another story we've known. OpenAI expanding the role of its chief operating officer. And this is, you know, Sam Altman increasingly focusing more on the company, the ChatGPT's research and product efforts. I mean, that company continues to kind of grow up a little bit, right? Evolve, maybe safe to say?
Yeah, I think that's a really good way to look at it. They have steadily increased the size of their C-suite. They added a bunch of people over the past year. They also had a lot of departures over the past year. And this is definitely like a sign that the company is getting a bit more mature. They want to have people that are recognized at the C-level heading up different departments. And also Brad Lightcap has been at the company for a while. So it makes sense that they would say, okay, let's expand his role some. And Sam might want to be doing something slightly different than he has in the past, or just shift his focus to some things that he couldn't focus on as much during the day-to-day.
Is there a way to think about this in the context of this restructuring as a for-profit public benefit corporation?
I think that could be part of it. Maybe just to more delineate who's in charge of what at like a high level. Mm-hmm. That could be a bit of it, and just, you know, making things seem a little bit more officially organized. But some of that I think we'll just have to wait and see.
Why do we know? Why have people left OpenAI? Like people who go on to find, you know. What?
How would I know this?
No, but this is it's like you have this sort of in San Francisco in the Bay Area of this like mafia of people who've left OpenAI to go start like other multi-billion-dollar AI companies, like Anthropic, for example, or like someone like Ilya Sutskever, for example, right? It's like, yeah, I don't know. I mean, should this be looked at as like a PayPal 20 years ago, 25 years ago?
Ooh, interesting. I'm not sure. The one thing that I do know, and I guess you could see there and you could see here, is that people who work at startups, especially in the early days, either starting startups or working on them, you know, like very early employees, they tend to like that kind of atmosphere. So it's not, and also people just in general, these days tend not to have the same job for 10, 15, 20 years, right? So it isn't that surprising to me at a certain point that people would start saying, okay, I want to go do something, or, you know, I miss the smaller environment, or I want to try a new challenge. That said, if you see that happening to a certain extent, or depending on, you know, if people are coming in and then immediately leaving, obviously that would be worrisome, right?
All right. Yeah. No, exactly. Are the AI headlines, do you feel it's just got 30 seconds, kind of fast and furious coming at you, or what's top of mind for you right now?
Oh my gosh, what is top of mind for me? I mean, everyone seems to be working on AI-related agents. That we're seeing a lot of that. So going to be keeping a close eye on that, and just looking at what are people actually doing with generative AI. Coding seems to be a really popular one there, and so keep an eye on those kinds of companies. We'll probably see a lot more action there.
All right, good stuff. My daughter uses it for coding. Like, yeah, definitely.
What?
Yeah, you can use it for coding.
No, I know you can. That's really cool.
Yeah, it's pretty. Remember we used to say, go get it, just learn coding and you'll be set for life.
Just learn how to prompt it to code.
Exactly. Rachel Metz, thank you so much. Bloomberg News AI reporter out there in our San Francisco bureau. Stocks to watch.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. We got some breaking news. A redhead crossing the Bloomberg terminal. Boeing seeks to withdraw its guilty plea in that 737 MAX case. This is coming from the Wall Street Journal. I'm going to read right from it. It's a Wall Street Journal story once again. Boeing seeking to withdraw an earlier agreement to plead guilty in a long-running criminal case that blamed the company for deceiving regulators before two deadly crashes of 737 MAX jets. This is according to people familiar with the matter.
Yeah, trying to bring it up here on, trying to see why I can't get it up here.
Borrowing shares?
Yeah. You know what? This keyboard doesn't make, I type a B and it doesn't come up.
All right, somebody get Carol a new keyboard. In the meantime, I'm looking at what's happening to Boeing in the after hours. It's not just you, Carol. We're having issues across the board. That's okay.
Okay.
The aerospace giant seeking a more lenient treatment from the Justice Department, which, under the Trump administration, is reviewing numerous pending criminal cases that haven't yet gone to trial or been approved by courts. Boeing nearly sealed its fate last year, agreeing in July to plead guilty to defrauding the FAA, but a federal judge in Texas rejected the proposed deal in December, pushing the resolution beyond the Biden administration. Once again, that is from the Wall Street Journal. I did get shares of Boeing pulled up. They're unchanged in the after hours.
Yeah, but very interesting. And I was wondering as you were reading through whether it had to do with new administration, different Justice Department. All right, you are listening and watching Bloomberg Business Week. Carol Masser along with Tim Stenovec. Let's take a look at some stocks on the move today. With us is Bloomberg News earnings reporter Red Brown on Monday's stock movers. And let's start with Tesla, which is a name that definitely popped up on my radar too. It was one of my gainers today.
Oh, really? Great minds think alike.
I think it was #1 in the S&P 500 and the NASDAQ 100.
That's exactly it. Finished up 12% today. Biggest one-day jump for the stock since November. And like you said, the best performing company in the S&P today. That gain today of 12% actually equates to close to $100 billion and restored, I guess we could call market value.
Amazing.
So yeah, a bit of a winning streak right now for Tesla.
But no real reason why. I couldn't see any like real catalyst. I think in terms of my notes, I don't remember seeing anything that was a real reason. It just popped up.
No, I mean, it's interesting. It's actually kind of like against, I think, some of the news flow.
Yeah.
Besides, I guess, kind of the broader market relief.
Risk on trade today.
Exactly. Of just, people I think are starting to come to terms with maybe it's a little bit of an easier tariff situation, which I think trickles down to the consumer being a little bit more comfortable. But like I said, I think heading in today and in the last couple of weeks, it seems like all of the news has been really negative against Tesla. I think the BYD news today that their sales topped Tesla's sales for the first time, I thought was really significant. But again, the stock, I'm not a trader, probably for the better because of this. But yeah, I think a good day for Tesla, despite some of the things that are going on around the company, some of their key markets, and of course their CEO.
Still down 31% year to date.
Yes, it is.
Wah, wah, wah. Sorry, everybody.
Okay, well, let's go from the roads to the skies and see what's going on with United Airlines, an airline I did fly last week. And my seat was broken, Red. And obviously, shareholders did not get the news about my broken seat. And
did you get an extra glass of champagne or something?
I did. The flight attendants were amazing.
Yeah.
And they hooked me up. They felt so bad. There was nothing they could do. And she was basically like, here's what she did. She said this loudly too. She's like, you have a choice. You can sit in this seat, or we can delay this flight by 6 hours because it takes 5 hours to take the seat out and put a new one in. And everybody on the plane was like, please sit in the seat. Please sit in the seat.
Wait, can I tell you what the other choice was? Can you share that? And you were so afraid you'd be like beaten up. All right, I won't do that. Share. Okay, I'm not going to go there. Okay, Red. Over to you. Tell us about United today. Also a gainer of mine.
Yes, despite broken seats and mid-air controversies with Tim, the stock's doing quite well today. It's leading gains among a bunch of travel stocks. Again, I think of this kind of risk-on mood of maybe the consumer is doing a little bit better than people were warning. And it's just 2 weeks after we got a kind of a string of airlines coming out and saying weaker consumer demand is going to lead our expectations actually lower than we originally thought. So. Yeah, again, sort of against the run of the news, I think, is United. Maybe if you were kind of paying attention to some of the smaller corners of the travel industry, you could have seen some signs of this. Carnival actually reported on Friday, and they reported results that just blew, excuse the pun, results out of the water, and really handily beat expectations, and that's on mainly two things: really healthy demand and strong onboard spending, which I know you guys are well acquainted with when you probably spoke with him this week. And it was interesting though in the call, every single analyst, their first question was, any signs of demand pullback? And, he was getting, the CEO, Josh Weinstein, at the end of the call was almost like exacerbated, just like saying like, there's nothing there for them, That
was a warm up for his interview with us when we kept asking about signs of the consumer too.
And just like cheap tease, like if you missed that interview with Josh Weinstein, the CEO of Carnival that Tim and I did on Friday, be sure to check it out.
There you go.
At Bloomberg.com or wherever you get your podcast.
We only got 30 seconds left. Red, Intuitive Machines. Let's go to the moon. What's up?
Intuitive Machines, that climbed 30% today after earnings were really strong. A lot of that optimism is coming from a 22% growth in their backlog. So Intuitive Machines, the big news coming out of them was their second sort of, I don't want to call it failed, launch to the moon of landing a rover, a lunar module on the moon. It landed and was able to deploy most of the services that was planned, but it wasn't perfect, kind of stuck the landing, what have you. So the stock would have been down around 60%, I think, early through the year until today's rally of 30%. Again, because even though they had the negative news flow once again, they were able to demonstrate no real reason to suspect that the business itself is slowing down.
Stock is down almost 50% this year.
There's always next moon.
There's always next
landing.
moon. Bloomberg News earnings reporter Red Brown on Monday's Stock Movers. All right, that's going to do it for Tim and me. Have a good and safe evening, everyone. Balance of Power starts right now.